Ahoy there. Ahoy there. Welcome to our workshop and this week's educational part, as we were talking about in the bit before in our chart analysis, is the madness of the herd. I think this is going to be very interesting. There's just a few slides. It's a little bit abstract. It's conceptual. It ties in very much so with a lot of the things, the principles that we were speaking about when we were looking at the charts. We were focusing on cycles and seasonality was one of the things that we spoke about on the charts earlier. And it's kind of a different way of viewing cycles and seasonality. Another facet of the same concept is sentiment. And again, I have spoke about this in the past. If you want to read it before we dip into it, but if you want to read a book, there's a mention, and for most of you are already rolling your eyes. It's the same book I always recommend. It's Reminiscence of a Stock Operator. And there is an example of this sentiment that we're talking about in Reminiscence of a Stock Operator. It was written over 100 years ago. Let me say that again. It was written over 100 years ago. And what we're going to talk about now, we're going to talk about a more modern, a more up-to-date version of sentiment. If you've got the book, go and read it. You should be reading it 2 or 3 times a year. There's not a single chart in it. It's just a nice, easy read. And you will learn so much about how trading works. I've lost count of the number of ahas and lessons learnt and relearnt. It's a great book. And one of the things that we are talking about is illustrated in the back. I just remembered, actually. So it just kind of sparked my own memory. So sentiment is what we're focusing on, the madness of the herd. So it's in reference to, or the sentiment or the angle that I want to take with this is the media. And for the last month, I've been on the receiving end of, I just saw this headline. What do you think of this? And I get a barrage of articles about, is this event or mainly to do with the election, because obviously that's a hot topic at the moment. Should I be worried about this? The market's selling off and blah, blah, this and blah, blah, whatever the headline is, the media is always too late. So let me just throw a quick question out to our lovely members. What do you think? Is this a current article? This has been a hot topic of discussion in the last few weeks on the run up to the election and even through the summer. The data, can we trust Google? Can we trust Facebook? Can we trust Twitter with our data? Can we trust Amazon, big tech? Can we trust them with our data? So when you look at this article, absolutely, yeah, trust no one. But when you look at this cover article, would you say that this was an article from Time Magazine this year? Is it a current affair point, or is it old news? It may surprise you that this article was, this cover story was in 2006. And maybe the clue's on the cover. Can we trust Google? Was Facebook around in 2006? I think it was. I think it had just launched. So it wasn't really the scandal that it is now. It was still technically a startup. So this is a cover story from 2006. It's old news. And this is why the media is always the last to know. They are representative of the general public. And if the general public are always wrong, and you can go and look at I should have taken a screenshot so I could show you on the slide quickly, but go and look at spread bet companies in the UK. On the home, but it's law in the UK that all brokerages who operate out of the UK have to put their clients' success rates on the homepage. If you go and look at the homepage, they say 65% of our users lose money with us. But hey, come on board. Here's the sign up button. Now, that That's a shocking statistic. You can go and verify. It's a little bit different depending on the broker that you use, but it's completely in line with business startup. About 2/3 of businesses die in the first 3 to 5 years. So it's not that shocking. It's normal. That's normally what happens. So things like this, they shouldn't be shocking. It's just old news being recycled. So this is what I want to talk about when it comes to sentiments, old news being recycled. And this is often why when the market has a little bit of a spasmodic knee-jerk reaction to what looks like new news, the reality is it's old news and it bounces back really quick. So it's only when we see genuine new news that the market's going to be shocked, in which case there's going to be a genuine holy shit moment when it comes to the markets. So whenever I see, can we trust Facebook? Can we trust Google? Let's short Facebook because there's a scandal in the news. Well, no, it's been going on for 15 fucking years. Get over it. It's old news. The market does not care. And get on with it. So that's, again, just an example of sentiment. So whatever the media is saying, typically your viewpoint as a trader should be 180 degrees in the opposite direction. As a trader, your viewpoint should be 180 degrees in the opposite direction. And if you don't believe me, here's my slide deck. So again, old news or new news? Old news, is it a current affair? Is it old news? Now, this was right before I think it was as the 2008 crash was happening. And what this article was talking about was buying houses right before the 2008 crash. And if you go into, so should you really be buying? Now, when you start to see Time Magazine say that you should be now Time Magazine doesn't normally offer financial advice or investment advice. But when you start to see, like I think this is an industry magazine. This was Realist. I think this is actually an industry magazine. So these are the people that you should listen to. They normally comment and provide commentary on the markets, in this case, the housing market. So when Time Magazine starts talking about now's the time to invest in houses, don't miss out, get your foot on the property ladder, it's going to be great, don't want to miss out. Time Magazine are not investment advisors. Why on earth would you want to get your financial or investment advice from the media? They don't normally comment on these things. Now we know what happened next. This is January 2006. Why is Time Magazine telling you to be an investor? Now, in property terms, literally 12 months later, the housing market crashed in 2008, and then we saw the financial crash on the back of the housing crash a year later. So the market crash actually happened in 2007. It just took 12 months for it to, it took about 15, 16 months actually, to actually for the stock market to actually catch the cold, essentially. That the housing market sneezed in a big way, and the stock market caught a cold a year later. So these things don't happen fast, is the thing to remember when you're looking at the mainstream media as a measure of sentiment. And again, if you don't believe me, like, you can go and verify all these things. You can go and look at when the housing market, you can go and marry it up with when the market was telling you to buy or sell, if you're going to remortgage. And it's not just the housing market. It happened with oil. Now, I remember I was watching oil at the time. Now, on the left here, you've got 1999, huge oil spike relative to the time there. And I don't know if anyone remembers, but in the UK, when that was happening and around 2000s, there were rolling protests of lorries and oil tankers. And I remember queuing. I had my first car. I remember queuing for petrol fuel at the pumps because there were shortages. And it was all because people, that almost sounds familiar. We could change all these headlines and change it with toilet paper, couldn't we, at the moment? There was shortages, but there wasn't an actual shortage. It was just perceived shortage because the prices were going up exponentially, and the prices were going up and up and up and up and up, and people were panic buying. That's what was going on right there. I just took the word oil out. That's what we're seeing right now. Now, what was different here compared to 2003? Because something similar happened in 2003. Now, what was different is that the market was shocked. Again, we've had oil shortage in the past, 50, 60, 70, all the way through the last 50, 60, 70, 80, 100 years. It's not new. But what's different around this time is the speed of information. One thing that I remember that was different in 2003, when we had a similar thing, there was oil crisis, in the same way that they were worried about shortages back in 99, 2000. But one of the main differences is every day on the media, especially in the UK, I would imagine it would have been similar in the US, but every day they were giving forecasts of what the price of oil was going to be per barrel. And at one point, there were serious, genuine forecasts of $240, $300 a barrel. What's the price of oil now? $20, $30? They've recalculated it, but back then they were forecasting $300 a barrel. Now, what we didn't have here was queues. We didn't have rolling protests. Everyone was conditioned to expect higher oil prices. Interesting. But it was a precursor to the ramp up in oil prices. And this is the time, again, The Economist, was talking about now's the time to invest. I remember being contacted by a business owner that I know. I'm trying to think. He had a plumbing and maintenance business. So around 2006, 2007, I was asked, and I remember being asked because I told him where to go and what to do when he got there. Thanks, Anthony. I told him where to go because he was trying to teach me how to suck eggs. I was a little bit more arrogant than I am now. I've mellowed a little bit in my age. I'm just confident. Back then, I didn't have experience, but I was arrogant. Now, 20 years later, I've got confidence because I've got knowledge. Anyway, but I remember him saying, should I buy oil? He's trying to tell me how to buy oil right here, right before this crash, right before oil took a swan dive. He's trying to teach me how to suck eggs. It's ridiculous. It's not exclusive to oil either. We can see Bitcoin. I'm choking on the name. This is 2017. These are all 2017. Crypto's billionaires. How to become a crypto billionaire. The blockchain princess, if you want to go Blockchain Weekly. I don't personally. And then Time Magazine. Here we go. Time Magazine gets involved. How to be successful at Bitcoin investments. That's what this is. That's the clue right there. That's the clue. Or Bloomberg, Forbes, Time magazines, but then Time Magazine does another special about how you can profit from Bitcoin. How they're giving you investment advice. That's the sentiment shift right there. They're giving you investment advice. And then we've got Barron's. Barron's having a nice cover on Bitcoin and how to profit and how it's taking. And this is more of an announcement that the Bitcoin was being accepted by Wall Street, if you remember at the time, and they rolled out futures on Bitcoin. And for anyone who knows their history, this actually happens. They did this in 1600s with the tulip mania. They introduced futures on tulips, and then the tulip market bubble burst. And that's exactly what happens with Bitcoin in 2017. And for anyone who's been following me for a long amount of time, in November, right there, in November, we made a public announcement. It's on podcast. You can go and download it with my business partner. And if you want to verify it, you can fact check. But we called it, this is the top of the market. This is the top. And it's because of that. It's because of all the other sentiment changes that we saw it's because Time magazine was talking about that on a personal level. I talk about it at a very micro level. At the time, I was unsurprisingly sat in a coffee shop when we back in the day when we could do that. But I was sat in a coffee shop enjoying my favorite pastime of enjoying a cappuccino and reading a book and just watching the world go by for an hour in the morning, which is what I love doing in the UK. And every table that I could hear, the conversation, Bitcoin, 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 Bitcoin. Every Tom, Dick, and Harry was talking about Bitcoin. There was kids telling other people what Bitcoin was and how to invest in it right there. That was the top of the market. That's sentiment. Now you'll see it in the media first. This is the best investment opportunity of the year, of a lifetime, at the moment. Don't miss the property market. Get your foot on the property ladder. Get your foot in Bitcoin. You don't want to miss out. Every day on the news, there was people mortgaging their houses, selling up, investing $50,000, $80,000, $100,000, their life savings into Bitcoin right there, right at the top of the market, and then pop. That's what happened next. That's the sentiment shift that I'd like to look for. And the media is always late. The media is always the last to know. And what we think is new news is old news. Again, just kind of reinforcing what we spoke about earlier. This is 2006, and this is 2017, and this one's 2018. This is not new news. The market doesn't care about this. They don't care. Sure, Facebook's going to have a knee-jerk reaction adverse to the events, the news. Oh, a little bit of negative news. No one cares. No one, the market doesn't care. It's not new news. It was new back then. It was new back in 2006. It's not new in 2018. It's not new in 2019. It's certainly not new last month when it was used as an election talking point. We're going to put a stamp on privacy with social media, blah, 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 whatever. Markets do not care. So this is a good illustration of sentiment. I want to show you this next cover story. I'd like, if you feel like it, if you can do fast fingers, is it this year or another year? Is it this year? Is it a current affair? Is it new news or old news? New news or old news? So what do you think? Is this cover story new news or old news? Is it this year or another year? Yeah, I'm kind of leading you down the path. I think we kind of get the sentiment. This is old news. This was at the beginning, I think it's January, my apologies, May, I think, 2017. 2017. This is old news. It's not new. More recently, this is this year. I called the top of the market the week after, or a top of the movement. So I wouldn't call it the top of the market, the top of the move. No, it was the top of the market. When I saw this, Brian, you might remember this. Anthony, you might remember this. One or two others. I posted this in our insiders group, and I said, this is the top of the market. And this is February 2020. That was the top of the market. Now, I didn't know why. I didn't know why the market was going to crash. I'll never know why until afterwards. What I do know is that the media is always late. I'd like to say wrong. It would be inaccurate of me to say wrong, because they're not always wrong, but they are always late. And this is a statement of fact, but they are representative of the general public. The general public are the last to know anything. Why do you want to listen to the media? So a little bit of a warning thought. We don't want to pay attention to the media is all I'm trying to get to. So if you are going to listen to the media and you are going to watch Jim Cramer talk about stocks, if you're going to tune in and listen to me, I've got to apply the same warning. it's just for entertainment. You've got to form your own opinions. Now, I try and teach you how to fish as opposed to give you a meal. The media is trying to give you a meal, but their agenda is very different from mine. The media's agenda is to sell newspapers. They don't care what happens to your retirements. They don't care what happens to you as a person. All they care about is that they've got more eyeballs. They're getting more attention. So all they want is the headlines, the catchy. They'll recycle old news and pretend it's new news. They don't care in the slightest. And as we know, they're typically wrong. It's usually a precursor to a bubble. So when there's a lot of froth, when there's a lot of excitement, like with big tech's 2 trillion run, if you remember at the time, it was which company is going to be the first $1 trillion business? Was it? I think that was the kind of the specifics of the headline. But that's what's going on. That's what was going on, and it benefits of hindsight. But you can see in February how to prepare for the pandemic. So they do get it right, but with this as the headline, they always get it wrong. That's the death knell for me. That's the indication that, you know what, this is probably the top. Now, in this case, the following week, prices were tipping over. It's usually 3 months, 4 months, 5 months. In the case of some of these headlines, it could be 12 months, a year. So this one was 2 years later. It took a long time for the financial crash to actually crash. I was running a live trading room at the time, and for 2 years, it started off as a joke, but for 2 years, it was like, is today the day? Will it crash today? Oh, it's not crashing today, right? Let's carry on. Well, we knew there was going to be a crash. The writing was on the wall. For anyone with the eyes open, we knew it was going to happen. There's good indications. There's clues all around us. There's footprints. And this is sentiment. And we're using it in the media to identify when a bubble, when a frothy market, when a frothy topic, a excited situation is coming to an end. It's when we see it on the front cover of magazines and newspapers. Maybe we hear it in the coffee shop because everyone was talking about Bitcoin. You know what? This seems a little bit more like the end of the market rather than let's participate because you're not in early. All these clues are there. So sentiments, that was essentially the theme of today's session. I trust that it makes sense, but the madness of the crowd. When you spot someone talking about something that maybe they don't normally talk about. I've used media as an example. Again, it could be every table around you in the coffee shop talking about Bitcoin. That's probably the end of the move because the general public are the last to know anything. And the media is a representation of the general public. So that's it. That's all I've got to say. Thank you very much for your time. Thank you very much for your attention. I'll see you all at the same time, the same place next week.